Hey everybody, this is Jim at SP500chart.com. It's about 4:20 on July 15th, 2013. We're going to use some time-honored techniques to try to understand some modern markets. And this is one of our featured daily technical analysis videos of the S&P 500 index, because I think that's probably the best overall gauge or bellwether of overall market health. But look, before we take a look, I need to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts. You know I do that. I got all kinds of lines. It looks like, have you guys ever played pick-up sticks? Sometimes that's what this chart looks like. So bear with it, stick with it. But anyway, I can draw these lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. That may mean making fundamental analysis of the markets of individual stocks. It especially means making an inventory of your own emotional makeup so that you don't get yourself into a situation that becomes self-destructive in terms of your ability to maintain risk and your ability to handle risk. Finally, I need to remind you, as always, that I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Coming into today, we kind of came into this day out of our weekend video with the idea that we are sort of in a fairly broad, fairly large ascending channel defined by these two, I guess we'll call them turquoise lines. And I'll be honest with you, this top line, this is kind of open to debate. We could redraw this line like that, and I think you would be just as valid as using the parallel line. Just for the sake of just for the sake of general practice, I'm keeping this line parallel because we've seen a lot of that happen. And also in the weekend video, I mentioned that even though the S&P has been closing for the past 2 sessions at all-time highs, we have yet to trade up to this black line up here, which is the intraday all-time high at approximately 1687. And today we inched a little closer to that. But the markets were up, but not by a whole bunch. So I'm still thinking there are reasons to expect resistance up in the high 1680s, and as the days go by, wherever we might touch this ascending purple line. This is ascending purple line, if you'll recall, is the neckline from this head and shoulders pattern that formed in through the month of May and broke down in early June. This extends on out. That should provide some resistance. So, and by the way, getting over that line right here, that sure was a good buy signal back on the 8th of July. So let's take a look a little bit more closely here at what's been going on today. Just want to show you that the past 3 days after that gap up on the 11th, we have been in this little ascending channel. Again, pretty much a parallel channel. And I would say if you're really looking for a reason to sell and you've got a hair trigger finger on the sell button, maybe this is a good little line down here to use to trigger that. But I'm thinking for those who are more in the camp of maybe what would be called a swing trader, then I'm thinking this lower line down here may be the thing to keep an eye on. So that's what I'm doing personally. Guys, since the day was really kind of non-eventful, I think I'm just going to leave it at this. No big moves one way or the other. Nothing really got broken. Getting a little closer to that 1687 level. Tomorrow looks to be as good a day as any to try that out. See what happens. I would expect some resistance there. But I want to remind you, if you've been following these videos for any time at all, we've seen that the S&P and the markets in general have had this real knack for surprising us with a move that is to the upside. Now, I want to do one more set of lines just for your viewing pleasure. And I'm just going to make them magically appear. 1, 2, 3. And there we have a new set of red lines that may also be worth considering. And remember, a lot of times when you have a fairly broad ascending channel, you have other channels within even that pattern. So what we're looking at is, again, this broader channel, and then we've identified this little channel on the 5-minute chart, and we may also have a third operating channel right here. So it's kind of interesting. This red channel, if it proves to be useful to us, would be serving the purpose of moving the S&P from support in this large channel to at some point where it would find resistance. Okay? And what's interesting is this much smaller channel on the 5-minute chart presently would be serving in the function of taking us from resistance in this red channel to test support in that same red channel. Does that make sense? In other words, here's our broader channel. The red channel takes us from low to high, and this little blue channel is operating inside the red channel to take us from high to potentially, I'm going to say low, but you know what I mean, from resistance to support. So this is all kind of interesting. Let's see how this plays out in the days and weeks ahead. I want to thank you for your attention, for your support. Hey everybody, I do appreciate it, and I can't say it enough. Take care.